Programs Coordinator for the Wisconsin Dental Association, and I'm very excited to welcome you to tonight's WDA BizTalks webinar. We thank Huntington Bank for their support and look forward to hearing about their updates on practice finance lending. As a reminder, tonight's presentation will be recorded. We ask that you mute your computers, and we encourage you to use the chat box at any time during the presentation to ask questions, and the Huntington team will answer as many as they can at the end of the presentation. Before we get started, I'd like to invite you to consider registering for our next BizTalks webinar coming up on Wednesday, November 18th. First Business will be joining us for a nightcap from 6:30 p.m. to 7:30 to enlighten us on how to secure our own financial future. We've learned a lot so far, and we'll be learning even more tonight about our business finances, but this one will focus on our personal financial security. So grab your favorite beverage, and I hope you can join us. You can find registration details at WDA.org. Without further ado, I would like to introduce today's speakers, Jen Frank, Alex Poe, and Penny Nunn. Jen specializes in financing acquisitions. Alex specializes in financing, practice expansions, and startups. And Penny leads the Practice Pulse program for Huntington, a coaching program for first-time practice owners to help them succeed. Thanks again for joining us this evening. And now I'd like to turn everything over to Jen from Huntington for our program.
Thank you, Candace. We appreciate everyone joining us tonight. As Candace said, I'm going to talk about selling your dental practice, purchasing a dental practice, or refinancing a dental practice. So first, I will talk about selling your dental practice. What are banks looking at from a seller's standpoint? Banks look at the revenue trends of the practice. Have the last 2 to 3 years of collections been consistent? If there has been a decline of more than 10% from one year to the next, what has caused the decline? Is the dental practice space leased or owned? If the space is leased, when does your lease expire? Will the borrower be able to renew the lease? Banks want the lease to match the term of the loan. If you own the space, are you planning to sell the real estate with the practice? Down payments for real estate range from 15 to 20%. Borrowers don't always have this money available to put down. A seller note can be used for the down payment. Another option is to rent the space to the borrower and have them purchase at a later date. Post-COVID, how has your practice rebounded since reopening? Since the practice has reopened, has production increased? When comparing June through September 2019 and June through September 2020, are the production numbers higher in 2020? We want to see that patients are coming back and there are positive trends in production. We are looking to see that the practice is back to 85% of 2019 collection numbers. Are banks still lending? Yes, banks are lending to buyers. We have been financing practice transitions since the middle of March. What year are you looking at to value the practice, 2019 or 2020? We are looking at 2019 for the value of the practice. The monthly production trends post-COVID are important to validate that the practice has rebounded. Practice purchase prices have varied. Most practices are still selling for 70 to 80% of 2019 collections. Next, I'll talk about purchasing a dental practice. What are banks looking at from a buyer's standpoint? What has changed since COVID? Liquidity is more important post-COVID. Banks want borrowers to have liquidity when purchasing a practice. It is important to have 10% of the purchase price of the practice in checking, savings, or stocks. If you don't have 10% liquidity, have you paid down student loan debt? Have you purchased a home and used money down? Have you had any other one-time large expenses? Are you able to get a gift to increase your liquidity? A seller note may be needed to make up the difference in 10% in liquidity. Experience. Banks are looking at borrowers having 1 to 2 years of private practice experience. We are looking to see that your current production matches or is more than the selling doctor's production. Procedures. Will you be adding new procedures that the selling doctor is not currently doing? Practice fit. Why do you feel that this practice is a good fit for you? New graduates. If you are a new graduate, lending is available using an SBA loan. This is a great way to obtain financing right away. SBA does require 10% down of the total loan amount. 5% can be from the seller as a seller note. Some other things that are important: having a clear dental license, a credit score of 700 or above, and no previous bankruptcies. Any of those three that I mentioned can also be mitigated with an SBA loan. And last, I will talk about, as a practice owner, how can you increase your cash flow with refinancing? Refinancing existing practice or real estate debt can help to increase cash flow. You can lock in a practice loan for up to 15 years or a real estate loan for up to 20 years. You can also start your new loan with interest-only payments or 3 months of deferred payments to, again, help with cash flow. And now I will turn it over to my coworker, Alex, who's going to talk about startups and expansions.
Excellent. Excellent. Thank you so much, Jen. Like she said, my name is Alex Poe. I have been doing dental financing for just over 11 years now. I do specialize in practice startups, expansions, relocations, remodels, basically anything with a project piece attached to it. So that being said, I get the question a lot: where do I start? Right? Whether it's a startup from scratch, first-time practice owner, or if it's someone who is looking to relocate their current practice into a bigger space because they've outgrown their current space, or is looking to do an additional location or do ground-up construction. The question I get a lot is, where do I start? And what I always tell people, and it's very important to make sure you do a good amount of planning. Do your homework. You know, the failure rate of dental practice is very low, but when it happens, it can be, life-defining. So both personally and professionally. So you want to make sure you're doing the proper planning, and we get that question: where do we start? How do I plan? What I always tell folks is build a dental-specific team around you. And what does that exactly mean? What that means is, if you're looking for a space, a lease space, or a building, there's probably a dental-specific person that can help you. There are dental-specific commercial real estate brokers. There are dental-specific contractors out there. And I'm sure many of you know these folks, but some people may not. So build that, get yourself a dental-specific CPA who can help you, with that growth or with that startup. Dental-specific consultant. So there are a lot of folks out there who are willing to help with that, with the startup or the expansion. And same thing with the lenders. There are multiple dental-specific lenders out there, and I'm sure you're aware of a few. But it's very important to work with someone who understand the nuances of owning a practice ownership, of startups, of relocations, and what's needed in terms of a dental loan. The next step, depending on where you're at in your career, if it's a startup, I would say work on a business plan. Develop your business acumen. So what does that mean exactly? So having a business plan, whether you're a startup or established, it's good to know what you're planning on doing, right? Like if I grow from 4 operatories to 7 operatories, what is this going to mean for my business? How much more revenue am I anticipating? Or if you're a startup, just have that business plan to understand what procedures you're going to be doing, who you're going to hire. Just have that business plan and stick to it. And I also mentioned developing a business acumen because, as you guys know, most dental schools don't have very many business classes. So how do you develop that business acumen? You know, you could talk to your colleagues. You can talk to some folks who have owned practices in the past. You know, you can you ask people that you're currently working with. If you're an associate somewhere, there's a lot of different areas. There's interactive healthcare communities, dental towns, folks like that. So your state associations, things like that can really help develop that level of business acumen too. So and before securing financing, of course, we want to, I think Jen touched on it a little bit, is maintain a high level of credit worthiness. And that's nothing new. Everyone knows you have to have good credit. But you know, it's not something we encounter a ton with people with bad credit, but it does happen. But that's obviously something we look at very carefully. And so once you get all these things in place, that's when you secure the financing. So securing financing is a very loaded question, and I would just say no matter what bank you're with, just make sure it's a dental specific bank that understands your industry. And there are many things to look at when you pick your financing, right? Everyone understands rate. That's we get that, but there's just as many important things to look at when it comes to your project, whether it's a startup, whether it's a ground up construction that's going to have a long lead time from start to finish. Things like the loan term are very important. You know, similar to your home mortgage, you should consider the longest term available for the time being, depending on where you are in your career, of course. That's important, you know, whether it's a 15, a 12, a 10, a 7, a 5, whatever fixed rate term that you're looking for, just make sure it fits your needs and your business's needs. Another thing to consider would be the prepayment options, and they vary from lender to lender, but they're all pretty similar, right? And prepayment is twofold. One, it's what is my penalty if I were to pay it off in year 1, year 2, year 3, year 4, so on and so forth. If you pay off your loan in its entirety, you may have a penalty assessed with that. And it's important to ask those questions. But just as important with the prepayment language is to ask about principal reduction. Does my loan allow me to pay extra towards principal if I have the excess cash to do so? Just to understand the terms of the prepayment, very important part of the aspect of your loan. Another thing to consider, especially for startup, and I know I keep bouncing back and forth between the startups and the expansion or the established stocks, but one thing to consider is my bank that I choose going to help me with my ancillary products, the things that I need to run a business, such as business credit cards, your checking accounts, of course, your payrolls, merchant services, things like that, because you'll need those items. And some banks help with those things, some don't. It's just you got to make sure you're comfortable with as much information and you have all the tools needed to be successful in your business. And there are many banks that will help you with those items. Some do, some don't, and so on and so forth. Excuse me. Now that the project's going, you have financing in place. One thing that you got to establish the budget, and you have to stay on budget. And how do you determine this, right? So this goes back to working with a team of professionals that will help you stay in those things. Like your lender should know what dollar amount you're looking for, what you can get approved for. Is it enough to get the project done to a certain degree? Is there a contingency plan built in for cost overruns, change orders, extra equipment, things like that? You want to make sure, what we always tell people is if you have a dollar amount in mind, you might as well throw 10% more on top of it, because it is we see a lot of overruns and things like that. Even if you plan better than anyone's ever planned before from a startup or an established doc position, things still happen. So just something to think about. And then lastly, the one thing that this is startup specific, but when it comes to preparing for this expansion or startup, the one thing that we see or want to see the startup doc doing is maintain that associate position as you grow your business. How you spend that time in the associate position versus your office is up to you. And I think we'll have Penny touch on that a little bit in some of the things that she's seen, our practice pulse specialist here in just a minute. But you want to, as you're starting that practice, you're going to have, not enough people to fill out that schedule right away. So of course you want to work to offset that cash flow and help pay your bills while you add new patients to your practice. And that's just part of the startup curve, so to speak. So that's what I do. That's how we kind of look for our clients. And one thing we get the question asked to us a lot, and Jen touched on it briefly, is in a post-COVID or in a COVID world, we're looking at things a little differently from the startup standpoint. She touched on the liquidity. That's very true. We do look stronger on the liquidity side than we ever have before. The one thing, in addition to that, is we're looking at the production of our associates that are looking to go into practice ownership. That was something in my 11 and a half years of doing this, I paid very little attention to. All I wanted to make sure is that you're a dentist and you had a pulse. So now we focus a little bit more on the production and to make sure that the people we are financing have the ability to produce the amount that would be a requirement of a startup practice. And that amount varies depending on location and things like that. But just something to think about. Work on that hand speed, get your production up, and financing shouldn't be an issue. And with that being said, I'll pause for any questions. I don't see any questions in the chat right now, but then I'll pass it back over to Penny or Jen if I don't have any questions at the time. I'm hearing no questions. Okay. Jen, do you want to jump back in, or Penny?
Yeah, absolutely. Thanks. I will, Penny, I'm going to ask you a couple questions.
Sure.
And then we can go back to any of the attendees if there are questions.
Sounds great.
So what are some things that could cause a startup practice to struggle or even fail?
Okay. You know what? I love getting those questions, and oftentimes on my welcome call with doctors, they want to focus more on that rather than, the tons of things that can help them succeed. And I like that because, they want to have that short list of, hey, what are the 5 or 6 things that could be detrimental to me? So just with my, 12 years of experience of being a practice coach and then managing for 15 years prior to that, I can definitely narrow down this list. So Alex touched upon it. It's in a startup practice, the dentist not associating and possibly taking pay from the working capital to cover personal expenses. In the beginning, you're more valuable working outside of the practice, earning at least half of your pay from the year before. This helps protect your savings, helps protect your working capital, and, sitting in your practice and waiting for patients to walk in the door, focusing on your practice, so to speak, does not help in any way. It doesn't help anybody. It just, increases your expenses. So that's my number one. Another thing that we have seen before is another household member who, makes a nice income, quitting their job to come and help in the practice. So then we have, a dentist who's probably making half of his pay, a partner or a household member who has given up their pay. And then, you all of a sudden have, just kind of put yourself in harm's way, as far as protecting your savings and covering your personal expenses. So two no-nos right off the bat. Another thing is inadequate marketing. Sometimes, the funds are depleted, and we'll talk about this in a minute with working capital, but inadequate marketing from the onset. You have to start with a range of marketing, track what works best, but right at that point, you're branding the practice. So you're going to get different returns on income with all these marketing methods. Some will have less. Some will swear that direct mail postcards have a low return on income, and they do. However, it's getting your name and your logo out into the same communities over and over again. So we need a range, online presence and everything. So, if you run out of working capital funds or reserves in the very beginning, you're really shooting yourself in the foot, so to speak, with continuing with this adequate marketing. We have a lot of doctors that may overstaff in the beginning, maybe, and I'm referring to GP practices in general, but, we're typically starting with one front desk who's there, 4 to 5 days a week, answering phones, greeting possible walk-ins, that sort of thing, maybe helping with some of that marketing, and then an assistant who's only in the practice when the doctor is. So very slim staffing in the beginning, probably no hygienist. I know everybody hates that, but that's just income coming out of your pocket and, again, burning up your working capital in those first few months. Another thing that we found, inexperienced staff, especially in the front office. So you're spending tons of, money on marketing. And then you've got this front office coordinator that maybe isn't experienced or doesn't know how to field those insurance questions or calls people shoppers. Instead of getting them on the books. So we definitely want somebody experienced in that role. They're going to be managing your accounts receivable and basically all the financials in your practice. We want to make sure that this person knows, what to do, how to handle those questions, manage your ARs. But most importantly, when you're dropping those marketing dollars, we need to know that they're converting those callers into scheduled appointments. And, my biggest thing on that is nowadays, if they're calling your office, they've already picked your office. They've looked at you online. They've read all your reviews. They've really researched you. So if they're calling you, they're calling to schedule. So we really need to capture those. Another thing is lack of in-network insurance participation. If other nearby competitors are participating with these PPOs, it's really tough to be a fee-for-service in a startup practice. You're losing, a lot of exposure right from the get-go. Now, if it's typical for the area that you choose, maybe higher median income, maybe it's typical for everybody to be out of network. You don't have to be, but it's a really good competitive edge to start that way. So something to consider there. And those are really my most common. I can delve in a little bit if anybody has questions about anything that I just mentioned, but those are the most common things that I've seen just over and over again that will quickly make you fail.
Hey Penny, it's Alex. What about, so similar question as before, but what about acquisitions? What do you see if a doc comes in by an established practice? What can be detrimental there?
That's a great question too. And obviously, with an acquisition, it's really tough to make one fail. Banks are making sure that the profit margin's nice and strong and the numbers are really adequate. So it's really hard to make one fail, but we've seen it happen. First and foremost, making immediate changes to protocol. Obviously, if the practice is profitable, we know that what they're doing, even though it's maybe not at the best level or not the way you expect it, we know it's working. Or replacing key staff members, that can be detrimental as well. Sometimes, believe it or not, folks don't care that the dentist has come and gone, but boy, take away their hygienist and that can be tough. So we always recommend that you get in, kind of take a deep breath, get to know the patients, the protocol, the staff members, and I can promise you what you thought in the first couple of weeks, you won't think after 6 to 8 weeks. Your mind will change on everything. So I always just recommend get in, take a deep breath, meet everybody, get to know everything, all the systems, and then, incorporate your changes. Another thing that I've seen had immediately reduced revenues is coming out of network. So, and again, Columbus, Ohio area, none of these dentists when I started 30 years ago were, everybody was fee for service. PPO was a bad word, but if you've got, a seller who's in network with, 12 PPOs and you come in and you don't sign up with any, that's an immediate revenue hit that you're not going to be able to take. So obviously we could talk, ways to work around that or which ones you can come off of without harming the practice. But doing that immediately is definitely detrimental. Another thing is not being able to perform the same services or having a different standard of care. So same services, if you take away, maybe ortho or Invisalign or, molar endo, that sort of thing, definitely a drop in revenues. And then standard of care, obviously we all are held to a standard of care, but you could have somebody who was extremely aggressive with diagnosis and you come in and go, hi, that's just not my way. So there's a fine medium between, completely dropping down to go from extremely aggressive or extremely conservative and then go, completely the opposite. So you want to make sure that somebody has the same kind of, and standard of care isn't the right way to say it, but you want to make sure someone kind of diagnoses the way you do and looks at things the way that you do, for those revenues to kind of maintain, and be stable. And then another thing is just really failing to adhere to budget and control your expenses. So, you're coming in where the seller may have ordered freely with supplies, and let's say this assistant, orders the supplies, is very great at it, but you're coming in with a practice loan, maybe a real estate loan. Your expenses are different, and they're going to be higher than that of the seller. So you want to make sure that you're controlling those expenses from the onset, and that's where a dental specific CPA can be really helpful as well. But those are my top 4 right there. It's really, really hard to make an acquisition fail. But if you do one of those 4, I can tell you, you're going to be hurting.
Excellent. Thanks, Penny.
Thanks, Penny.
Yeah, sure. Any questions from anybody? Anyone want me to delve any deeper into any of that?
Also, for the folks, just a reminder, you can type, we have the meeting chat live here off to the side too. If you can type your questions into that chat box up in the conversation box, I guess. So you can feel free to ask a question in there if you're on a computer rather than a mobile device.
Yeah, and Alex, while someone may be thinking of a question, you did touch upon going over budget, and I missed that on my startups, something that can be detrimental. So, obviously, going over budget with your build out and your equipment. Typically you have, 3 buckets of money. You've got your equipment, your build out, and your working capital. And what happens when you go over budget in those 2 categories, your build out and your equipment, guess what? That money will probably come from your working capital. So, as Alex said, very important to watch your budget through the project. That's something that, obviously we do as a lender. We help you manage that and watch it closely. But if that happens, then again, you're opening with less working capital than you originally budgeted for, that we, allowed. And we want to make sure that you have all of that to get you through that first several months until you break even. So that's another thing that can really harm a practice.
Thanks, Penny. Well, we'll
Sure.
open it up again for questions and give everyone a few minutes. If we don't see any questions come through, then Alex and I are just going to highlight again what we feel is most important post-COVID. Okay, I don't see any questions. So as far as selling a dental practice, again, just to highlight what we feel is most important after COVID is that the practice has rebounded. So if you are looking to sell your practice, you just really want to make sure that the practice has come back. And if it hasn't, then we would just need to have an explanation as to why. If you are looking to purchase a practice, the most important thing post-COVID is liquidity and production. So again, having that 10% liquidity to fall back on, and with production, is the practice that you're looking at purchasing in line with the production that you've been doing? And then as far as refinancing, I think it's obviously a great time with where rates are at, all-time lows. And then just to help with cash flow, because there is still obviously uncertainty out there with everything. So again, stretching out loans on a practice or real estate can help with cash flow right now and lock you in at a great rate. And I'll go ahead and turn it over to Alex just to again highlight what he feels are the most important things post-COVID.
Thanks, Jen. Yeah, I have seen several things. And again, I mentioned it when I talked about the startups. We do want to see good production, make sure you're working, and then liquidity. We put a greater emphasis on the liquidity piece. Save as much money as you can, even if that requires eating ramen noodles for a little bit. But on the established side, depending on the size and the scope of the project, we look at a couple things for an established dock looking to relocate, remodel, buy a building, do an additional location. We can look at year-over-year production. We can do like a production collection report for the past 3 months. Compare that to let's say it's July, August, September of 2020, and compare that to the same time frame for 2019. And if it's above where you were at that time last year, great, no problems. And if it's 75, 85% of where you were of that production, then that's normally okay, as long as we're seeing the right trends. If it's July, you had a great month just because of all the pent up demand, and then August and September it was down, that could be challenging. But as long as it's at least level or getting closer on the uptick from where you were last year, and then we can utilize the revenue of the practice to extend the loan out. But that's kind of what we look at from an established doc standpoint. Was, has it rebounded? How has it rebounded? What's the percentage of 2020 versus 2019? Which of course we know practices were closed for a couple months, and it was definitely a challenging time, and we want to make sure that the procedures are still all in place. There's no limited to what you're providing in your practice. Were there any changes to how you run the business? Like, is it currently operating and at what level? If it is operating, how long was the disruption in the business? What changes are made to the business as a result of COVID? Is there an expected impact for the long term? Is there any are there any types of procedures that are being, or limit to any types of procedures, that are being performed? And then, we just want to know, if you took any financial support from, like in terms of the PPP loan or an EIDL loan, what's the status of that? Is it in line to be forgiven? Things like that. So we'll look into the actual time frame of the COVID shutdown, and see, how the practice turned around since. And we're seeing a lot of good things right now. I mean, most of our practice, I cover multiple states. I cover Wisconsin, Illinois, Michigan, Indiana, Kentucky, and half of Ohio. And I can't think of, more than, maybe one or two that's not better off the past few months of 2020 in terms of revenue than in 2019. So while it was down for a little bit, I've seen a good resurgence in the practices that I've dealt with. And it's, we've talked to hundreds of practices the past few months. Huntington itself has been open and never stopped lending throughout this process, which is a testament to our customers, and we want to be, take care of our own. But at the same time, it was a challenging time for everyone. It was a challenging time for everyone, for employers, for healthcare providers. So it's good to see the positivity of the production that we're looking at day in and day out, and it is good to see where things are trending towards. So, any questions in regards to lending in a pandemic environment? I know that a lot of people have questions about that. Nothing.
Yeah, and while maybe some questions are being generated, Alex, I wanted to say, with my population of clients, again, like you said, came out of the box strong June and July with wonderful revenues, and again, catching up on appointments, services, that sort of thing. August did, just slow down a little bit, but in comparison, but again, that's a trend that we're expecting to see. So, if anyone's thinking of selling or someone's thinking of buying, an existing practice, don't be discouraged if you look at August and September and see those numbers are lower than June and July. That's something on our end. And even, our credit manager will reach out to me and say, hey, what did you see? And, I can share that information and say, hey, June and July, super strong. August, pulled back down a little bit. September's traditionally a slow month for dental practices. I didn't see that this year. And again, like Alex said, the numbers, from the practices that we deal with or just folks, that he's talking to about, the sale of practices, they're doing well. Everybody's doing really well, but we do know what to expect to see with those numbers and definitely can help out, when it comes to, hey, is this a good practice or, is this a good time to sell my practice?
Thanks, Penny. Well, we'll open it back up again to see if anyone has any questions.
Jen, it looks like we got a question in the chat there. We have, let's see, it says, what kind of rates are you seeing offering for a 10-year note? A great question we get quite a bit, and it varies from product to product. What that means is from a startup, it's going to be a little bit higher than it would be for an established doc doing a relocation, just because of you're lending into a established or into a startup business versus established business. The rates vary not just on product, but then also on the credit profile, credit score, personal financial statement. What we always tell people is that we're competitive as anybody out there. We don't want to get in a match. Rates are good right now. Rates are at an all-time low, and we'll be right there amongst all of them. So. I hate to be really vague like that, but I don't want to. Does that somewhat answer the question? Rates are good.
Any other questions? All right, well, Candace, it does not look like we have any questions. We all are available via email. If anyone has questions that they think of after the presentation, they can reach out to us. Otherwise, I will turn it back over to you if you have any closing remarks.
Thanks, Jen. No, I think we're good. If anybody has questions, like Jen said, I will make sure that you get all of their emails tomorrow when I follow up, so you can reach out personally. But thank you all for taking time to join us tonight. And like I said, I hope you look forward to joining us for November 18th when we talk about more personal side of financing. So thanks, Alex and Jen. And sorry, Peggy.
Oh, no problem.
So great. Thanks. Everybody enjoy your night.
Thank you so much.
Take care.
Thank you.